Hey there, Seb the Realtor here. In this video, I'm going to speculate what the world will look like when mortgage interest rates hit 8%. If you're worried about what a high interest rate future looks like, then you definitely want to watch this video. If you've been reading the headline news lately, I'm sure you've seen that mortgage interest rates are at a 20-year high. In the past few days, mortgage rates hit 7.49%. That's the average 30-year fixed mortgage rate. And a lot of media have reported that this is a 20-year high or a 20-plus year high. So actually, I went back and I looked at the interest rate chart over time, and what did I see? I saw that in May of 2000, actually, the mortgage interest rate, the average rate was 8.6% in May of 2000. Now, I got into the real estate business in February of 2003, and at that time, mortgage rates were about 5.8%, so we're quite a bit higher than what we were back then. But you know, I got into the business when the real estate market was really heating up. It was going pretty hot and getting hotter. And actually, by July 2006, the average 30-year mortgage rate was about 6.8%, which actually is not so far from where we are right now at about 7.5%. And, you know, the real estate market was really cooking along right then. Prices were shooting through the roof, even in the face of interest rates that were about 3/4 of a point lower than where they are right now. And by July of 2007, mortgage interest rates were at 6.7%, virtually unchanged from where they were the year prior. But then what happened after that? Well, astute students of history will know that right about that time, the mortgage crisis started going and the whole economy basically blew up. The mortgage market sort of fell apart. And, you know, in response to that, the Federal Reserve began cutting interest rates to stimulate the economy. And we did see mortgage interest rates at that time really start to go down. And, you know, surprisingly enough, in about May of 2013, which is, a little more than 10 years ago, mortgage interest rates were at 3.35%. So, like, for a number of years, mortgage rates were on a fairly steady decline until about 2013 when they started making their way back up again. And by 2018, they had reached about 4.9%. And then, of course, the Federal Reserve began cutting interest rates again to keep the economy chugging along. And by December of 2020, mortgage interest rates were down to about 2.67%, and that is about the all-time low of mortgage interest rates, at least so far as I can tell, given the charts that I have available to me. I think the thing that I take away from looking at these charts is that really the mortgage interest rate isn't really all that tied to like what's going on with real estate prices. Mortgage rates can be increasing at a time that real estate values are also increasing, and the reason for that is because when mortgage rates increase, it is often because there's a greater demand for money. And when there's a greater demand for money, that means there's more people having jobs, they're getting raises, they can afford to pay more. And that's why banks can afford to charge more interest for the money that they are lending out. So oftentimes you will actually see mortgage rates rising when the economy is actually very strong, creating jobs, putting more money into people's pockets. And that is why we see this rise in rates. And it does not mean that housing prices are going to fall up to a point. And is that point 8%? You know, this year, if you can believe it, home prices actually in July were up versus July a year ago. And that's because July a year ago, they had actually come down quite a bit from March and April earlier in the year, right before mortgage rates started jumping up. And so there was that big shock to the financial markets, to the mortgage market, and a lot of buyers just pulled back and they weren't buying. And we did actually see like a pretty sharp decline in home prices that kind of mirrored the sharp increase in home prices we had seen earlier in the year. So July of this year was actually slightly up above July of last year in most parts of the Bay Area. And I mean slightly up, I mean like 0.5% or like 2%, right? Not a very big year-over-year price increase whatsoever. But that did happen even in the face of mortgage interest rates, which were considerably higher than they had been a year ago. But at some point you have to wonder, when is the straw going to break the camel's back? When will interest rates finally get to be just too much and they really will bring home prices down? Have we actually reached that point here at 7.5% mortgage interest rate, or will it be 8% or 8.5%? We don't really know. Now, when I got into this business in 2003, and interest rates were about 5.8%, which again is about where they were 1 year ago when everyone was freaking out about how high interest rates were. The real estate market was rip-roaring, right? The real estate market was shooting up. Homes were flying off the shelf, and it wasn't because of interest rates. It was because of the easy money policy. It was no problem to get a mortgage loan. There was these 100% financing, no doc, liar loans. If you could fog a mirror, you could get a loan. And I mention that because it very clearly shows that there are many other variables out there which affect what is going on in the real estate market that are not tied specifically to that interest rate. And so the question is, what happens when mortgage interest rates hit 8% or 8.5% or 9%? And the answer is, I don't know. Nobody knows. And the reason why is because mortgage interest rates are just one factor that is affecting the overall real estate market. There are many periods of times when rates have gone up and home prices have gone up, or rates have gone down and home prices have gone down. There is no direct correlation. There are many other things which are happening in the economy at the time, and nobody knows for sure what's going to happen. Now, of course, obviously, higher mortgage interest rates do mean that it costs more to borrow $100,000 at like 8% than it would at 7.5%. But that doesn't mean that home prices are going to go down because of that. Again, home prices are up slightly year over year, even though mortgage interest rates are up considerably during that time period. So much has to do with the law of supply and demand and what the overall economy is doing at the time. There really is no simplistic formula that shows higher interest rates equal lower home prices. At the same time, a lot of people are saying, and I'm looking at you, mortgage brokers, they're saying that when interest rates do drop, you can expect that home prices are going to shoot up because, of course, the money will be much more affordable and buyers will be able to pay more for their homes. But that is only going to be true if the number of homes for sale stays the same. I think that if mortgage rates are to drop, it will be because the economy is weakening. In a weakening economy, people are more likely to put their homes up for sale because they've lost their job or they can no longer afford a mortgage payment. Maybe they have to let go of their second home. And we would see an increase in the inventory of homes for sale or an increase in the supply of homes for sale. And what does the law of supply and demand tell us? And by the way, the law of supply and demand, it's a law. It's like the law of gravity. It exists everywhere, across time, across geography, across all classes of assets, including houses. It tells us that when there's a greater supply of homes for sale, prices are going to go down, especially if there is a decrease in demand for property, as would happen in a weakening economy. All right, well, that's all I have for this video. I hope you have enjoyed it. And if you have, would you give me a like? I would really appreciate it if you would. And if you have enjoyed this, you might also enjoy some of these videos over here. These are some of the most popular videos here on my YouTube channel, so please do check those out. And don't forget to subscribe. I would really appreciate it. All right, that's all I have. Thank you so very much for watching, and please stay tuned.